Welcome. Welcome to the Motor Carriers Insurance Education Foundation's monthly truck stop webinar. These are presented at the second Thursday of each month at 2 p.m. These webinars are presented as industry updates and what's happening to our motor carriers and to insurance on the current events. This information does not qualify, or this presentation does not qualify for CE credits. As we hope you know that we do provide CE, we've committed to provide 12 hours of CE each year. We present those in a different time frame, starting with the first Tuesday of each month, again at 2 p.m., and then through the 4-hour cycle or 4% presentation cycle. If you're interested in that, you can contact our office and Beth will send you that information. If you have any questions, please type them in the chat window, which is on the right-hand side of this presentation. They will be answered during our live presentation if we have time allowed, and it will be responded to. If not, we'll respond to it later in email. Oh, I forgot. This is Tommy Ruke, in case you all haven't heard previous ones or recognized my voice. We appreciate you being here. We kind of try to put this together each month to come up with something that's interesting to everybody. As we go through this presentation, if you lose any audio problems or others, send us a note in the chat window. Give us a call at 800-741-4884. One other thing, in case you missed this, and there's other people in your organization who need to access this information that we're going to share with you today. It'll be posted on our website during the truck stop drop down, and you can look at this at any time later. It takes us about a week to get it from here to our servers and up and running, so please feel free for these and any other ones that we have done in the past. When we reach out for different subjects, a gentleman I met a number of years ago, Sam Tucker, is a guy that I go to as the source of this, and he does a lot of work. In fact, we first mentioned he's worked for a insurance company doing cargo, and the first presentation we ever did was cargo. We've had some discussions concerning the new changes in the bill of lading, a couple of things that we go in cargo. So I talked to Sam a couple months ago and said, would you give us an hour of your time today on this date and walk through these kind of things? He has his own company. Sam, I'm sure glad my father named me Junior with all those initials after your name. You missed one of those things, my friend. Anyway, Sam, hope everything's well with you. Welcome, and walk through what we want to share with our people today. And then you and I'll ask you some questions as we go through.
That sounds great, Tommy. Thanks so much. And I appreciate the time and opportunity to be here too. And I appreciate everybody's attention as well. I know everybody could be in someplace else right now instead of listening to me. And let's go on and banter back about cargo insurance and everything in between. But I absolutely love it. I'm a huge geek, if nobody could pick up on that. And if you couldn't tell by what Tommy said about all the letters after my name, I think I have like 3 times as many letters after my name. So I'm kind of a big deal about education, to say the least.
One of the things about the ones after my name, I made up about 3 of them, but I always see they're legitimate. But anyway, go ahead.
And it works too. I mean, I don't think anybody's going to fact check.
Well, you got one of those. That's a TRS. So
exactly, absolutely. Absolutely. It's actually funny. That's actually how I found out about the organization to start with, is I was thinking about starting my own designation. And I don't know if I ever told you that or not, but that's funny.
Well, all right, so go ahead. Here's something about you.
Absolutely. Well, I mean, with me, I've been in the insurance industry for 14 years, underwriting, and of those 14, 12 was spent underwriting big trucks and charter buses. Those kind of fun things for folks like National Interstate, Berkshire Hathaway, and most recently Travelers. Before 2015, I left the company in 2015 and left Travelers to start my own company. And we focus a lot on doing fleet safety and compliance services and those kind of related topics for motor carriers, especially owner-operators of small motor carriers. And the other thing we really do is do a lot of consulting work and safety service type things for actual insurance carriers and insurance agents as well. So got about 3,300 clients across the country currently. So we've enjoyed quite a bit of success over the last 14 or 15 months now, so it's been pretty crazy, and definitely keep plenty busy too.
For everybody listening, that's how I pay him to do this. Anyway, all right, the next hour I pay for allow you to talk about. Let's talk about what we want to talk about. Talk about what we want to talk about today. Okay. No, I appreciate that. Yeah, it's nice that we have the background. Let's talk where we are.
Absolutely. So what we're come to talk about today, obviously, too, is cargo liability and recent changes you need to know about. So that's what we titled it as, and kind of what we're going to do today is go through a little bit and talk about Carmack liability, things like that, contracts, and most importantly, the Uniform Straight Bill of Lading, which is put out by an organization called the NMFTA, which is the National Motor Freight Transportation Association, something like that. So it doesn't really, or Traffic Association, that's what it is. So essentially, after that, we'll talk about the key changes that they've recently come out with. And recently, I mean about a year ago, is last July is when all came down the pike. But it's really now starting to take hold in a larger format now that more folks are actually being exposed to it. So we'll talk about that, deep dive a little bit further into what those actual changes are, especially the top 3 that are going to impact you and your clients. And then from there, we'll actually go through and talk a little bit more about what we can do to help our clients with these issues that are coming down the pike too a little bit. So after we get the roadmap going, let's talk about, just from a high level and talk about the recent changes. So essentially back in, like I said a minute ago, July 2016, the NMFTA, which is the association of about 656 or 657 or so less than truckload carriers out there, they issued changes to their Uniform Straight Bill of Lading. So the Straight Bill of Lading, we'll talk about exactly what that is if you're not quite aware in a few moments, but essentially it's a transportation contract in lieu of any other formal contract. So
Sam, let me stop you for a minute, because we have this question when I'm doing one-to-one in these areas that I'm far less informed than you are on this. I say often that the shipper is the big hammer here, and they force this. Is this bill of lading something that the motor carrier then would give to the shipper? How often does the shipper come back and change this? Now, and then maybe you can dig down a little bit, because I talk about maybe a couple, 3 situations here. First off, that a lot of our motor carriers have an ongoing contract, a transportation shipper contract or customer contract that goes spells that. And then when their individual drivers pick up a load, I think they mainly just pick up a receipt or not, and all the terms and conditions are built into that ongoing contract. Then there are some that you have an individual bill of lading that we're talking about here. So my concern is, first, that I analyze it that way, and second, who controls that, and third, how do we know if our insured is using this uniform bill of lading, straight bill of lading or not, and could there be chances where some shipments will be under it and some shipments will not be under it?
Yes, to everything.
Okay. All right.
So part A of paragraph B. Now, essentially, every carrier who's a part of the 656 carriers, it actually covers about 90% of the freight that rolls on the streets today. So when we talk about impact and how this could potentially impact folks, it could be a ton of carriers out there and shippers too. The NMFTA is a group of carriers. So these are all carrier-generated bills of lading. And we'll talk about the history, how it came about in a few moments and kind of understand. But it was essentially, from that aspect, it's carrier-generated. Now, like you were saying too, and we'll chat about this too, is that from a shipper standpoint, they're, especially depending on the strength of the shipper, like Walmart, for instance, would have a lot better bargaining power position to make effective changes to this or to have a totally separate contract than would, say, your mom and pop type shop or shipper who would be, shipping maybe one less than truckload shipment every week or two. So you have a lot different circumstances depending on the actual freight carriage and the power of the shipper relative to, the others. I'm
going to throw up one other question, but we don't need to answer it now. And that is, what kind of bill of lading is using when you get from a broker? Is it one the trucker issues or the shipper issues or one they issue or both? We don't need to answer right now, but that's an interesting question. How do we know if this shipment that we're going to be insuring cargo for is under this new uniform bill of lading, the old uniform bill of lading, or some hybrid? So before we get through, remind me, we'll come back and circle around that once we go through this presentation. But I think that's something that we need to make sure that everybody understands too. Okay?
Absolutely. I think we'll be able to
to this point, this is something new. This is who's putting it out, but not all your shippers or all your motor carriers will be involved in this, but we need to know if they are or not. Is that fair enough to this point?
Yeah, absolutely.
All right.
And so, like I said a minute ago, 90% the freight carriage in the U.S. is governed by this document. So, and everybody who's a member of the NMFTA, and essentially what that is, that's all the carriers who are in part of that, 656 of pretty much the largest LTL carriers in the country, less than truckload carriers in the country, subscribe to this. And this is how they get classifications for the commodities that they haul, and also the general freight rates that are associated with that. So as part of being that group, this copyrighted bill of lading is the bill of lading that you're required to use if you're a member of that group. The other thing too is, and why 90% of the freight traffic is governed by that particular document, is that most other bills of lading out there make references to the straight bill of lading that's issued, or the uniform straight bill of lading that's issued by the NMFTA. So they don't really copy it; they just reference it or incorporate it by reference. So that's
all right. You just raised another question again.
Okay.
I apologize.
That's okay.
This, and I'm sure there's people out here that have the same unfamiliarity with that. You mentioned LTL. I can understand that. That is a situation for less than truckload.
Sure.
For you who've been in our classes, remember this is when your insured is picking up loads from multi owners of the property, and FedEx, LPS, all these larger people here. Clearly, there you don't have an individual contract with those shippers on a typical basis. So therefore, the shipments would be typically provided by the motor carrier. How does this go over the truckload carriers? Are they a part of this association, or is it just or just limited, or is it a hybrid where it's always involved in LTL, like you just mentioned, and some truckload carriers are using this or not? How can you distinguish between those two types of motor carriers?
Yeah, absolutely. Most of the truckload carriers typically have their own bills of lading that they use. They're not generally different than the old language bill of lading that the NMFTA had. With that, though, too, most of them aren't part of this particular group. It's actually a lot of.
So this will be the LTL. Are you seeing any? Truckload carriers moving to this bill of lading or not? I'm just curious about that.
I have not.
All right, because most of our customers on Foundation are truckload carriers.
Sure. And that's typical what we see too. And most of those folks, most of the larger truckload carriers typically have either their own, like I said, bills of lading they use, or they have their own contract that they use, either with the shipper, either with the broker that they use, or the 3PL that they use, or with the actual motor carrier directly. It just really depends. But you see that, like you're saying previously, a lot of the larger carriers out there are mostly truckload carriers, and don't necessarily might not apply to this. But
could it?
Absolutely. Okay.
All right, so I just want to distinguish that. When we say it's new, and you say most motor carriers are going to use it, 90% of the freight are, but that's that particular LTL industry here. Now, are you saying that 90% of the freight is shipped through LTL?
Not necessarily. It's just 90% out there either incorporate this specific language by reference, or they actually have the specific uniform straight bill of lading by the NMFTA.
Okay, that's fine. I just want to clear that up, because to define what kind of motor carrier we might be insuring that would be using this. So right at this point, we're talking about most of our LTL carriers will be part of this, and maybe depending on where they load and how they deal with some of the truckload carriers. Was that fair enough at this point?
Absolutely.
Okay.
And so take a look at it. Just in addition to any of the terms and conditions the UBOL says, the Uniform Bill of Lading provides, it actually also promulgates terms and conditions for the handling of freight loss and damage claims. Generally speaking, in America, over the last 100 years, the Carmack Amendment, or USC 14706, is the essential legal basis for settlement of loss and damage claims in the country. So with that, the NMFTA and NASTRAC is actually back when they changed it.
Let me get another slide, because that's the reference to the Carmack Amendment, and that's the federal statute itself. Go ahead.
Yep, absolutely. That's the statute. And essentially, this is the Carmack Amendment governs freight loss and damage claims throughout the country, and it has for 100 years, a little over 100 years now. And the case law that is associated with that has also been about the same time. So, and that's really part of the largest problem everybody has with this, is that these new changes, as we'll see in a few minutes, about a dozen of them, but the three really more important ones, threatened to upend this 100 years worth of legal precedent and even the actual Carmack Amendment itself, and things that we've, as a transportation community, as an insurance industry, have taken to be essentially literally as law over the last 100 years, now threatens to be upended almost overnight, which is kind of crazy. So that's why this
Carmack's always our starting point. Then we deviate from here. And now you're saying the whole Carmack thing might be revamped in those areas.
Right, absolutely. And the other thing too is, I mean, and it's important to mention, and we should probably mention here, is that anybody, any motor carrier and shipper can deviate from Carmack if they'd like to. But the requirement for that is under 141 B or 14101B is that they actually have to do that, one, in writing, and two, it has to specify which terms and conditions deviate from the Carmack Amendment or the statute that's out there. So if they expressly waive the Carmack Amendment in their contract, as well as specifically outline what deviates, then they're okay. That's fine. It's when they want to do something different, yet don't take those two necessary steps to obtain the waiver of the Carmack Amendment appropriately, that's when problems happen. That's when you find yourselves in courtrooms and those kinds of fun and interesting things. So with that, in absence of a formal transportation contract like we're talking about, and like you mentioned a few moments ago, between the shipper and the carrier, everybody who takes part in this in MFC has to use this this uniform straight bill of lading. So that's why, again, it becomes so pervasive, and why what started out seemingly innocuous in some circumstances really blossomed into a larger issue as soon as folks started realizing, oh my goodness, this is a lot larger issue than we previously thought, and to really get a good understanding of all the terms and conditions that were changed. And so, again, that's kind of what we're here for today. We just want to talk about those kind of things and get a better understanding of that. So to get kind of a background about where we've been and where we're going, and I promise I won't bore everybody with the history of it, but essentially in 1922, the federal government came out and they provided a bill of lading for the rail carriers, but they didn't do one for the motor carriers. So essentially what happened is the shippers and carriers got together and agreed on one. It was approved by the Interstate Commerce Commission. Life was good. So that was perfect until they did away with the Interstate Commerce Commission in 1995. And that kind of messed everything up in terms of the filed rates and filed tariffs that that all carriers had to have at that time. So with tariffs at that point tending to go away, with rates and classifications being different at that time, it led to a new ball game, I guess is a good way to put it, in terms of the actual settlement of losses and freight damage.
Sam, I always like to point out that ICE-T Act that was imparted here for the ones here who are not, or your age and not as old as me, don't remember where each state had their own rate filings.
It's crazy.
And intrastate. And the way I understand it, FedEx sued the government and said, look, we pick up in Fort Myers, deliver in Sarasota, but we take it to Memphis and back. So we're interstate commerce, even though intrastate. And that's where ICE-T came in, which basically voided all the state rate filings and oversight of rates from any intrastate as well as interstate. Is that not what happened? And that's the big economic part here that kind of opened up the marketplace from the state requirements.
Yeah, you're absolutely right. Just as Carmack amended, kind of taking the states and individual contract rights away, and essentially ICE-T did the exact same thing. Is essentially federal preemption of any kind of state getting involved with that, with motor carriage.
Yeah, before that, all of our insurance had to file separate intrastate rates and then interstate rates and all that kind of stuff. So that kind of changed the whole. And I also think that's when they quit requiring financial statements to be filed too, if I'm not mistaken, close to that time frame.
That sounds right, but I'm not positive. I don't know.
Right. Then I'll go back here. All right, go ahead. We're now moved to 1997.
Yeah,
that's what most of our audiences work here. Okay.
Exactly. That's a little bit different, right? So, in 1997, like I see on the slide, I mean, in MFTA, so the carriers got together with the shippers, which were essentially represented by NASTRAC at that time, and NASTRAC typically represents their carrier base, or their base of shippers tends to be a lot of smaller carriers, generally speaking. At that time, at least, it was. And even these days, too, you have NASTRAC still represent a lot of the smaller shippers. And then the Transportation and Logistics Council, which is another large shippers organization, they tend to have a lot of the larger shippers in there, and freight brokers as well. So essentially what they just got together and said, hey, let's come up with a new set of terms and conditions, and let's come to some sort of agreement so we're not finding ourselves in court, day in and day out trying to argue about these things. So that's what they did. And so in 1997, life was good. They came up with something they felt was agreeable amongst all parties, and everything was good to go for about 20 years until fast forward to 2016. And like we talked about a few minutes ago, the things that have transpired since then have been kind of interesting, right? So
you clearly, because I'm getting back to it, you understand you brought up something that I did not realize, a distinction between the bill of ladings of LTL and truckload carriers for the new one here. I thought everybody was a uniform, and I understood how a LTL could have contracts different, with release bill and all that kind of good stuff there, and I can understand. But then both truckload carriers and LTL carriers use this uniform bill of lading. In other words, this organization that we talked about before that for shippers, did they care if it's LTL or truckload, or were they speaking for both?
It was, for the most part, it was both, because as you can see too in the language we'll talk about in a few minutes, previously the uniform straight bill of lading and the language that was in there beforehand generally referred to Carmack almost exclusively. So I mean, they put a basis and contract based back on the actual physical statute and case law that was there. So life was good. It was one of those things where the nuances between the actual uniform straight bill of lading and other bill of ladings that may have been issued by either a different carrier who wasn't a member of the NMFTA or another type of truckload carrier, it was a lot different. So I mean, with that too, it's for the most part, it becomes just like very nuanced in terms of the differences between the two, but the basics were essentially the same in terms of ability, time limits to file claims, the actual party who was presumed negligent, the strict liability standards that were previously included as well, and things like that. So everybody had a really good understanding based on Carmack, based on the case law and the uniform bill of lading, and the bill of ladings that had been previously used referred almost exclusively, back to Carmack. So it wasn't perfect, but it was a lot better than what this is going to be.
For anybody who does not know about the Carmack Amendment, the webinar that Sam did that's posted on our website about 2.5 years ago, 3 years, talks about Carmack. Plus, we have the CE filings, actually we're going through right now, that in the first hour of that, I look at or explain the best of my ability what Carmack means. So if you're interested in that, there are sources on our website that help you deal into more about Carmack and about their limitations and what a trucker has to do to verify, and our shipper has to do to verify those things. So it is available for our website. I just want to let them do that. But thank you for letting me know or updating us as effective as possible. All right, let's go to the next one then. Okay.
Absolutely. So like we talked about a few minutes ago, once a shipper signs the bill of lading, so we talked about as a carrier, these are carrier contracts. So it's essentially a basic shipping contract the carrier provides to the shipper. And once the shipper actually signs the bill of lading that's provided to them, they automatically agree into the terms and conditions on the back of that bill of lading, as well as the tariffs or the rules or regulations that the motor carrier provides that are incorporated by reference on that bill of lading. So the shipper, the onus really comes down to, it has to go to the shipper to actually be able to go back and understand what's in the tariff and to actually obtain copies of the tariff. And essentially, when we say tariff, again, we're talking about the rules and regulations that the motor carrier puts out. It says, okay, if we're going to haul this for you, here's our rules and regulations. Here's our tariff.
Which addresses both the fees and the care of the cargo. Right. And as I understand it, that tariff has to be available if the shipper asks for it. And most of our motor carriers publish this on their websites, but it's available if the shipper asks for it, versus the old age, which it had to be approved by the federal government.
Absolutely. And so with looking at all that too, I mean, like I said, every tariff wasn't necessarily different, but the basics were essentially the same. It was kind of boilerplate in a lot of situations. And then, like you were saying too, Tommy, I mean, the nuances really came to pass with different rates and things like that. With everything else too, I mean, it wasn't impossible to understand what all the terms and conditions were, but from a legal standpoint and from a business standpoint, the carriers and shippers, or really the shippers and their attorneys, really didn't take time to go through each of those terms and conditions and really figure out, what those terms and conditions were and what they meant on a general basis. Because again, too, with what we're talking about here, it's a lot more. It's a lot more overweighted towards the smaller carriers and owner operators too, especially, versus what you would typically consider, a larger carrier, even probably, 40, 50 units and above, I would think, would be a reasonable kind of break-off point. It's really the folks who rely on broker freight almost exclusively and don't have tried and true transportation contracts in place who this is going to have an outsized impact on. So if you count those folks inside your client base like I do, then you'll see that impact your book of business on a greater scale. So let's go ahead and get into it. So we hinted at it, alluded to it. Now let's just dive right in and chat about these three major changes. Now, again, I said there are 12 total that are really, present, but not necessarily as significant. But these three are the most significant. So Section 1A is carrier and party possession. The Section 1B, which deals for liability for loss or damage, delay, and then Section 5A, which is agreed valuation and released value, are the three most important changes. So let's get into it right now and talk about Section 1A. So the carrier, party, and possession. You can see on the slide, I'm not going to read it to you, but the carrier or party in possession in any of the property is really the main sticking point here. So previously it says the carrier, party in possession in any of the property described in the bill of lading was liable to common law. So Carmack, which we talked about previously, had stipulated that if you're a carrier in party, or if you're the party in possession or you're the carrier of the property, then you're strictly liable for those goods if they're involved with any kind of loss or damage. So with that, it's very straightforward. Now, what this new bill of lading has come out and says,
part of this common law is also clearly here is because it's in the carrier's care, custom control. It's on their truck.
Right.
So it's in their care, custom control. And so that's the essential part here. And to me, that's the big shift on the new one. But go ahead. I just want to emphasize. So common law is two things. In the absence of Carmack, it's still in my care, custom control. And second, Carmack is common law that will complement that, override it, or modify that.
Absolutely. And that really, like I said, follows the meaning of the Carmack amendment a lot more closely. So it's like I said, the parallels were great. But now this new language is here. It says the carrier shown as transporting the property described in the bill of lading is now going to be liable to common law. So like you were talking about before, care, custody, and control is kind of out the window. And you'll also see on your motor truck cargo liability policies, you'll see that care, custody, and control, or care, custody, or control, and different things alluding to that as being one of the three main portions of the insurance.
I've seen them say if the bill of lading is not in your name, we don't pay for the cargo.
And I've seen that happen multiple times.
And this is a major deal. Now, again, would it only be for we just got to be careful if even our truckload, any of our insurers using this, because this could change the whole ramifications of that. Again, the convenient interlining that some motor carrier would do if they get caught up, and it says, Sam, I don't have a customer, so I don't have a truck, so I'll say Sam over there, and Sam has the goes up the customer, pick the load up, but I still have the bill of lading in my name. I mean, how many times, Sam, have you seen the bill of lading is in a different name than the actual truckers providing the transportation?
Oh, it happens all the freaking time.
Right, and the problem here is that Sam's policy might not pay it because it's not in the bill of lading's not in his name, and second is I might not pay it because the cargo's not in my care, custody, control, or if I do have to pay it, I didn't get any premium for it.
Exactly.
So this is extremely, this is a gray area here. Go ahead.
No, you're absolutely right. I mean, that's the name of the game. It's what happens when the carrier actually hauling the goods isn't the same as the carrier listed on a BOL. I mean, that's the name of it, right? Especially, too, and my second point here is what's the impact going to be on freight brokers? And because like you were talking about previously, a lot of the bills of lading that are generated, and you mentioned it at the beginning of our conversation, actually go through freight brokers, and the freight broker is the one who typically
issues the bill of lading.
Yeah.
And so what bill of lading they're using issue, and we've seen more than once where the freight broker puts their name on it as a shipper.
Exactly.
In fact, they're not.
Exactly. No part of that whatsoever. It's crazy. And
now, explain contingency cargo real quick.
Yeah, absolutely. So for the contingent cargo aspect of it, most contingent cargo forms or motor cargo forms that have that kind of exposure to them, they'll exclude broker's liability when it's imposed by contracts or the bill of lading. So like you were talking about previously, if the broker is listed as the carrier in the contract, then the contingent cargo policy or most of them actually exclude that liability. So the chance for a disconnect here is growing exponentially. And not only that too, but obviously it's just going to lead to more fights between the brokers and the carriers to begin with. And the real question is are more brokers going to be held liable or attempted to be held liable for the actual freight damage? Freight loss and damage.
Before this, CARMAC exempt brokers.
Right, it didn't apply.
Right. Back door that make brokers responsible. But more important than this, look, everybody listening here, whether you're an insurance carrier or a retail agent or wholesaler, to this point, and later we'll talk more about it, you need to find out if your insurer is using this new uniform bill of lading. Most often be LTL, so if you are insuring LTL truckers, you can almost assume they're going to be doing that. If you're using truckload carrier, they might or might not. And from what you're saying, Sam, most of them haven't done this yet, but it could be possible here. And look at those things, and then look at your cargo policies to see how that wording is. Care, custom control, responsible for, does a bill of lading have to be in their name to have coverage? And then if you write the motor carrier, and you have the words there responsible for, yet it's on the policy, they give it to a trucker. In the past, we'd assume the insurance, the cargo coverage on the truck hauling the load would pay. But with this wording, it might not. And It might fall back upon your policy with the words responsible for. So even that's a violation of MAP 21, which we'll talk about in a minute, but that's you've got to check your policies. First off, you got to find out if you're insured or if they're shipping loads subject to this new uniform bill of lading. Now, you've been here since a year ago. How prevalent is this, Sam? How many of this is going, particularly truckload carriers?
It's growing, and the thing of it is, I guess the exposure is growing. It's one of those things that every carrier who's actually part of the NMFTA has to use it. So by the contracts they sign and joining the agreements and joining the organization, they have to use it. They're physically forced to use it, unless, again, too, they exempt themselves from using that by using a transportation contract. So I don't know. I don't have a physical.
No, you start saying you remember association. If you remember the association, you can almost assume they're using it. If there are LTL truckers, there's a great chance they're using. If a truckload carrier's there, they probably aren't, but you don't know what the broker's giving them, and you need to inform them to be careful if they get this new uniform bill of lading, if it's ever offered to them through the broker, to have a concern about it. Is that where we are? At least that's where we are right now.
Yeah, that's a great way to put it. And plus,
cargo carrier about these issues.
And plus, too, I mean, for a retail insurance provider, or wholesaler, even for an insurance company, it's really kind of a granular thing to be able to try to help them manage through this risk. So it's, and we'll talk about how we can help our clients in a little bit, but I mean, it's really a very, very large problem that's going to take place, and it's going to be a ton of litigation over it too, which is also going to have an impact on both cargo insurance as well as your client's business. So that's why it's just even that much more important too.
And there's 2 points about that. First off, this is a lawyer's annuity again, right? Is that what we're talking about here? The second thing is you also got to check your cargo policy to see if it has a duty to defend or an option to defend. Because this stuff starts getting suits, and if you have an option to defend, the motor carrier might be liable for the defense.
See, now you're spoiling my big finish. Come on.
I'm sorry. Excuse me. I'm so sorry. I've read it before, but you revised it for the first one I read. So let's go to another thing.
It's true. It's true. But no, I mean, it's one of those things. Trust me. I mean, it's the whole thing. The whole issue is so complex that we could mention it 4 or 5 times, and trust me, it won't be enough.
We're touching the bases here, guys.
Absolutely.
And the bottom line is check the bill of lading insurance or shipping over, and check your cargo policies. Make sure there's not some anomalies between the two. That's called excitement opportunity time. Let's go the next subject here. Okay.
Yeah, it's like my good friend Sam Rosatelli over at Allianz says. He said, words mean things. He's one of my mentors, and he taught me early on. Words mean things.
We can't quote Sam. I've done it too often. I've been around too often. I'm not sure he's always sober enough to quote. But anyway, we'll worry about that.
I know, right? But so the second,
I agree with you. He's a good friend.
Yeah, but words mean things. That's a very powerful statement. It's so simple but very powerful, and especially when you talk about insurance policies and truck insurance specifically too. I mean, I always say this and say it to my clients is that, auto liability insurance, auto physical damage insurance, generally speaking, is kind of boilerplate. It's not a commodity, but it's boilerplate in a lot of situations about how we respond to it. But cargo insurance, I mean, literally every single policy could be different. Just depends on the endorsements the underwriters put on there and or just the nature of the beast. It's not a filed form. It's not a filed rate system. So you have to go in there and take a look at everything and really try to do your due diligence and studying up on these contracts. I can't stress it enough. And it's extremely important.
I want to take a second, but when I talk about it in the presentations on cargo, I tell everybody, don't ever, this is mainly through the retail agents, don't ever write a cargo policy unless you got a copy of the policy in your hands. Second thing I say, there's no good or bad cargo policies. They're just different because, and if it meets your insurer's needs, it's a good product.
Exactly.
So don't get hung up on certain words. For example, I use some policies have a spoilage, some don't. But if my insurance hauling dry freight, who cares?
Right. Doesn't really matter.
So that's what you need. You got to have a copy of every policy you read, and we've got an overlay now. You got to see the bill of ladings your insurance are shipping under,
right?
Because now that's a part. Now does the cargo policy you're issuing beat these new words in it beyond just are we covering what they're hauling? But this is another thing they got to factor in when they analyze what your insurance needs are.
Sure. All right. So Section 1B, this is the section that really of the terms and conditions that deal with carrier liability for freight loss and damage, and essentially under CARMAC and the common law that's transpired over the 100 years, essentially said that the motor carrier who either party in possession or the carrier who is tended the goods, they physically have strict liability, so they're liable unless they can prove that they're not liable. And the way they actually physically did that was by citing one of these 5 carrier defenses, which would be act of God, act of public enemy, authority of law, act or default of the shipper, or inherent vice of the goods. So here's the big rub on this one: is the burden to prove freedom from negligence is on the carrier or the party in possession. Previously, that's what it read. Now, the new BOL came out and said, well, we like the 5 previous outs or statutory exceptions, we call them, but now we're adding riots, strikes, and any related causes, whatever that means. It says the burden to prove carrier negligence is on the shipper. So that is a major deviation from what we've seen over the last 100 years. I can't understate it. I can't overstate it enough. I mean,
give an example of what you're talking about.
Absolutely. So previously, to prove negligence or to prove freight loss or damage, the carrier had to, or the shipper had to prove that they tendered the freight to the motor carrier in good condition, that it arrived in bad condition when it arrived at the consignee's location,
or didn't arrive.
Exactly, or it just didn't arrive, exactly. And some value associated with that good. Then the burden shifted once they proved those few things to the carrier to prove that they weren't negligent in handling those goods. And the only way they could prove
5 outs,
right, they get one of the 5 outs. So if it wasn't caused by one of those 5 outs, you're on the hook for it if you're the carrier. So now the difference is so that's the freedom from negligence. So you had to have one of the 5 outs, but you also had to be free of negligence. So you couldn't have been negligent in handling that. So, and again, negligence, duty owed, duty, you have duty owed, duty breached, and there's proximate cause of loss.
Also the duties are breached, right? Okay.
Right, absolutely. So with that too, now it says the burden to prove carrier negligence is on the shipper. Well, so the big freaking question is, well, how are you going to do that? Because the carriers or the shipper's not sitting in a shotgun with you, in the truck rolling down the road. So, you can very easily prove freedom from negligence if you're the motor carrier by one of these 5 outs, or now it's these 7 or 8 outs, but if you have to be the shipper to assert the negligence, it doesn't make a lot of sense. And so, yeah.
Is this a new burden on the shipper to prove damages, or a burden the shipper can allege and the motor carrier has to refute that?
No, it's a total seismic shift in the way the burden is is assigned. So previously, the absolute onus was on the carrier to prove they were, that the freight was damaged or lost because of one of these, or it was lost because of one of these five things, and we weren't negligent. So if it was an act of God's, for instance, and there was a flood coming, you could say, okay, well, there was a flood that damaged it, but we are also free from negligence because we did everything we could to protect the freight before that actual flood happened.
You have to do everything you can to avoid it, right?
Exactly. That's that duty breach, right? So now coming to pass is this burden of proof has now been shifted solely on the shipper. So they have to prove that the carrier, right, the shipper has to prove that the carrier was negligent in handling it to be able to be successful in the freight loss or damage claim. So like you said a few minutes ago, that duty to defend now is much more important than ever because that the precise terms and the forms of the cargo policies is such that every single one of them can be different. So again, too, the related causes, any related causes, these aren't defined terms. In terms of
pretty specific or pretty.
It was. Right. It was, and when they drafted it, I mean, even the riot strikes and those kind of things, you still see a lot of that in our insurance policies, even though that wasn't part of the law at that part in time. But even with that, it's going to be, a huge question mark where there used to be a period, and so that's, again, the case law surrounding it, the related causes, trying to define what any related causes is or are is just going to be an amazing major headache for everybody involved, except for, again, the lawyers.
So what you're saying is the shipper has to say you're negligent on this part. It's up to them to prove that. But then if we're going to defend our case, that's when we're not negligent, because now it's broader, because you now can be negligent. Or I mean, there could be other times we don't have to pay besides the 5 outs because we're not negligent, but the shipper's going to claim that, and then we're going to have to defend it. Is that what we're saying, Sam?
Right, absolutely. And with that too, previously the carrier was assumed to be negligent unless they could prove they weren't. Right. Now the onus is going to be on the actual shipper to prove that they were prove that the carrier was negligent. So that's just
so that word shifted back to the shipper, but it might end with more disputes between the shipper and it's going to absolutely end up with more.
It will.
Okay, which gets again the strain on the relationship between the motor carrier and their customer.
Absolutely. And then too, and on your insurance companies with the claims administrators and the claims handlers, and trying to sell these losses, and trying to go through here and say, okay, well, which one applies? And I can promise you, I mean, I've been doing it for long enough to understand and know that, what's done on the front end and what the intentions are from the agent's perspective, from the client's perspective, I mean, even the underwriter's perspective, may not actually come to pass when it comes time to adjust the loss. Mm-hmm. And it's one of those things where, in this case specifically, an ounce of or a pound of prevention, or an ounce of prevention is worth a pound of cure.
Right.
So it's I can't say it enough, but it's just one of those things. Like I say, words mean things, So it's important to understand.
Now you're quoting Sam and Ben Franklin, right? But go ahead.
Right?
I don't know whoever's
two for one, right?
We got the next one.
Works perfectly. So again, Tommy, the thing we can be sure of that this is going to take years and years and years, decades even, to work its way through the court system. So even defining, like we said, what any related causes is, what it means, what it is supposed to mean, and what even any means versus all and other things. It's just going to be a crazy, crazy time for everybody. Then the huge shift to burden proof. I mean, this is going to be another huge source of litigation for years to come. It's directly contradicting what the Carmack Amendment says. So I'm not saying that possibly couldn't happen currently in a contract between a shipper and a carrier. There's some carriers out there that are very strong. They have contracts that they use that may not perfectly align with this. So I'm not saying this isn't happening today currently, but this is just so against the norm that it's an automatic red flag to everybody involved saying, whoa, just throw the brakes on here, let's talk about this. And so it's crazy. But like we said before, I mean, the duty to defend now is more important than ever. And that's why we were talking earlier about the outsized impact this is going to have on small carriers versus large carriers. Because small carriers, obviously, and owner-operators don't have large legal teams. They don't have the time and effort and energy to actually invest and put into these to understand all the things that are moving here and the complex moving parts and the nuances involved with that. So with that, too, they're going to rely on the insurance agents, risk managers, and even the insurance companies and claims adjusters especially on an even greater basis to understand what's going on and how they're supposed to protect themselves. So, again, that's why we're here today and why we appreciate you.
Right. Well, that's the important part. So, all right.
All right, so the third most important one is talking about the agreed valuation and released value situation. So previously, you can see on the left-hand side here, the old language stipulated if there's a lower value, if the motor carrier and shipper agree that they agree upon in writing, so the shipper actually has to, or the carrier has to offer a released amount. For limited liability, they have to offer a released amount of limited liability to get a lower freight rate, is essentially how it works out. So previously, they had to be in writing. It had to be agreed upon in writing. The carrier had to offer it. The shipper had to agree to it. So now what they've come in class is says, you know, instead it says, or is established in the carrier's tariff. So the actual carrier having to put it out there as an offer to limit liability for a reduced freight rate or released value on the cargo is just assumed, again, on the tariff. So it's not necessarily, it doesn't physically have to be offered. It's automatically offered just by being referenced to the motor carrier's tariff.
So if my tariff says I'll be responsible for, again, moving storage $1.35 a pound, and I don't put that in my contract with my client, it's assumed, and again, we're talking about the federal law would make it imply this, but let's say we do it for some smaller than that. It'd be assumed then that that shipment is under that release bill of lading. Folks, again, for you who are not in cargo, release bill of lading is when your insured is going to be responsible for less than the full value of the load they're hauling. And in the past, it had to be agreed between the two parties that is going to ship that release bill of lading, and that there has to be a quid pro quo, meaning that for a reduction in the cost of hire, or if most of it goes the other way, you do this unless you want us to sell you more, hire that. So it's usually presented the other way. We're going to release it unless you want to pay us more. It's usually how it's done. And so that usually is in either each contract of carriage. But this one said that if it's in the part of the tariff, it's going to be implied that tariff will rule. And now does the shipper know on every tariff? Is that that's where you're getting at, right?
That's exactly right. You hit it on the head. Okay. That was it. And so with that, I mean, too, because, again, previously carrier had to offer it. They had to agree to it in writing. Now the carrier simply just has to publish a liability limitation in their tariff. And again, too, just like previously, the shipper is still responsible for finding out what that tariff says and what the terms and conditions of that tariff are and where that's located. And as Tommy pointed out earlier, is like you're saying, I mean, it's one of those things where previously, you know, they had to offer it and had to be available, but now a lot of carriers just put it on a website, and there's really,
and they don't have to offer a higher limit.
Yeah, absolutely. So it's crazy, but it's going to be interesting to see how this one turns out, folks. And so again, I mean, this is already this particular portion. This is not well settled case law. It's still probably one of the most litigated CARMAC issues around today, in terms of the offer and acceptance of liability limitation and release value. And when you start talking about the actual cargo policy itself, you have to think about the different valuation clauses. So if it's actual cash value or legal liability, or if it's destination market value, or some combination thereof, depending on what the commodity is. Again, every single cargo policy could be different. So it's really important to understand which actual, valuation clause applies. So if you have the insured's legal liability, you're probably going to be in decent shape. And that's something that, as you're going through the risk management process with your clients, something you want to definitely make sure of when you're selecting a cargo policy for them. The duty to defend we talked about previously, as well as the legal liability valuation on the law settlement. Those are kind of musts in my book. Then the destination market value is also something that's relatively newer on the marketplace, and there are a few carriers that do offer it. And it's good. It's more expensive. Typically is an option, but there's good reasons for that, because that actually gives the shipper and it actually gives the carrier rather more leeway in actually settling the loss. So, all right. So again,
things everybody's been looking for. In conclusion, go ahead.
In conclusion, yeah, exactly. So we bored you with this stuff enough, and I hope not. But I mean, it's hard to understate. I mean, exactly how big of an impact this is going to have. So this is going to be a huge source of litigation for many years to come. Again, with 90% of the freight out there moving either under this bill of lading or have a reference to this bill of lading, or have, even with the truckload carriers like we were talking about previously, even if they have their own separate situations with transportation contracts, they still have stipulations that refer back to these. So it's going to be interesting to see
Sam,
what.
I want to clear up again this 90%.
Yeah.
We're not saying about 9% of all shipment. We're talking about 90% of the shipment done through the LTL industry, correct? Is this?
No, it could literally be 90% of the freight that moves in the country, even because, like we were saying about truckload carriers too. The reason that those folks are involved is because they still rely on third-party logistics providers as well. So they still have freight brokers and freight forwarders.
That number, it's a huge number, but again,
it is.
For LTL, it's more of a certainty than truckload carriers.
Absolutely.
And then you got your fresh fruit and vegetables, and that we'll talk about that. I think we'll spend a couple seconds on the Food Modernization Act, but a couple things like that. Those typically would not be under the Uniform Bill of Lading. The new one, would it be, or is that, we don't know yet is what you're saying. It could be.
Well, yeah, it all depends, right? Like everything else. But generally speaking, it hasn't been incorporated at this point. So if they're going to make any changes, we're not sure.
What's TNLC?
That's the Transportation Logistics Council. So that's the larger shippers, and the NASTRAC obviously too represents the smaller shippers. And as soon as this thing hit, these two organizations, which are both great organizations, were all over it. I mean, they were, it's crazy. So they saw this as almost like an act of war from the motor carrier industry. And it was totally kind of blindsided too, because they weren't expecting something like this to happen, and especially to be so drastic so quickly. And two, they were a little upset because there was it was unilateral. There was no input solicited, whether it had to be or not. It was a totally different situation for politics. But they essentially, the NMFTA said, that's nice, but we don't have to ask you to change our specific bill of lading. It's just, this is ours, and if you don't like it, then go scratch. Essentially what the situation was. So they ended up taking it to the Surface Transportation Board. The Surface Transportation Board, which previously had some type of activities along with this, they essentially washed their hands of it and said, I don't even think we have the right, authority to speak on this. So they haven't made any kind of formal agreement, arrangement, or anything otherwise saying this new bill of lading is good or bad or anything indifferent. They just said, not us. It's not going to be us.
Well, you can understand that because this is arranged between Sam and Tommy.
Yeah, absolutely. It's a business type deal.
And both sides can have an input from it, and, gets back to all that deregulation stuff. You and I can decide to do whatever we want to. As our friend Rob Moses says, I mean, we can say we're only going to be responsible on every other Tuesdays, and that's where we are, if that's what you and I agree to.
Absolutely.
So this is where we are. Okay.
So most likely it's going to be court is probably what's going to happen here for even the Transportation Logistics Council, NASTRAC, and MFTA. They'll probably end up in court trying to fight this for even still, again, years to come. So more importantly, how can you help your clients? So essentially, producers, underwriters, claims associates, we have to be aware of these changes. We have to understand what the impact of freight loss or what the impact of these changes are going to be on the freight loss and damage claims that we're going to see out there. And then, two, how to be able to talk with our clients about that, how to explain to them why a transportation contract might be better or worse, than having to deal with the bill of lading that's currently out there. So hopefully, if we've done nothing else to, over the last 45 minutes or so, we've impressed upon you the fact that that's important enough to be able to go back with your clients and actually understand what the situation is too. So.
Well, yeah, and you've opened my eyes a lot about this, and again, those steps we already talked about. Find out if your client is going to be using this, subject this, how they're doing it. If they don't do it themselves, find out if the shippers or the brokers are giving you that, and then you've got to look at your cargo policies to see how they address this new liability if somebody else is hauling. And by the way, that situation where I give the load to Sam and the bill of lading is still in my name basically is a contradiction to the MAP 21. Would you agree with that, Sam?
Absolutely. That's illegal now.
Right. That's illegal. So go back to the white paper. I don't know if you read it, Sam. I wrote about 3 weeks ago with the help of a lot of people about, are you a broker or are you a shipper? You got to go back to that, because that's also where you're going to have a double situation where you not only have liability, but you also broke the law. And the first time a claim is not going to be covered under that, that's when the shipper, somebody's going to get a lawyer and that's when the government's going to come in and penalize you. To this point, there's no, right now there's no enforcement of that unless somebody makes a complaint under it. But in this case, there could be more complaints out of here because of MAP 21, which would get you more, not only double dipping if your motor carrier is doing that, but it could be liable from the not no coverage, but still liable for having it. But the second thing is now when the shipper sues them because they gave the load without brokerage authority, now you got a potential fine involved there, as well as no coverage.
Right. So that's why I get into, like you were saying earlier, the duty to defend becomes even that much more important too, because these aren't going to be small claims. Essentially,
worry about this.
Right. Yeah, they're going to be the couple $100,000 losses, and if you don't have cargo insurance for that couple $100,000 loss, there's going to be issues. And again, too, is you don't want to be on the back end of that stick.
But the same thing we concluded when we talked about the new Uniform Food Safety Modernization Act that Bridget and I did about 3 months ago. You've got to talk to your cargo carriers. You've got to see how they're going to address this, to see if they're aware of that. We've got to look at the forms that we're writing to make sure that there's not provisions, in that case, spoilage or not, and duty to defend or not, things that here we've got another overlying situation is a policy triggered by the bill of lading or carrier custom control or legal libel, responsible for. Those kind of words we have become very important. As Sam says, read the words here. So we now have another thing we got to be aware of, where we need to talk to our insurers about what they're doing, what they're signing, how they're handling it, what contracts they're signing, and then talk to insurance carriers to make sure they're not, oh my gosh, involved in it because of this. Is that the conclusion we want, Sam, on that part of it?
I love it. That was perfect.
Folks, we're about out of time, so please, if you've got any questions, email it. We have able to obtain you answers. Like, again, I'm writing a couple of Ask Tommy questions today. I'm hoping to get out and publish to everybody. But send it to us so Sam and I can do that part of it. Very briefly, Sam, you want to say a little bit about your company real quick as the rest of the commercial? Go talk to them.
Absolutely. I appreciate that too. Yeah. Again, too, the main thing we do for agents and carriers is specifically the Carrier Safety Survey, which is essentially where we go and analyze the CSA scores of the motor carrier, especially if they have bad CSA scores. And then we come up with a customized improvement plan for you. So it's $25. It's perfect for if you're going out for a prospect, or if you're going out to a renewal client, or if you have a renewal that's not going too well and the underwriter needs to see something to say, how are we going to get this fixed? These are perfect for it. And the other thing is the Mass Safety Manager program on the back end too. So not only do we tell you how to fix it and what's the problem is we can actually help you fix it or help your client fix it too. So it's only $49 per month per driver, and essentially we act as their totally outsourced safety department. So we'll handle all their drug and alcohol qualification, all their drug and alcohol management, all their driver qualification files, implementing ELDs, taking care of their hours of duty or hours of service, duty audits, everything else too involved with that.
And as most of you who have attended any classes, programs we have done, annual conferences and other things, you know that we feel, the foundation feels, one of the responsibilities to us who are providing service to motor carriers is to go beyond issuing the policy and provide them the services. For you who are retail agents who are insurance carriers without good loss prevention people are offering those services, I think the services still to be offered. And agents, if you don't have time at all, here's a source that you can go to that helps you meet that obligation, that by this reference or getting involved in it keeps you better in the position. You'll keep you in a better relationship with your insureds because you're offering them more than a piece of paper, whether you do this yourselves or tell them a way they can get it done efficiently. So absolutely. I think that's the conclusion we want on that. Sam, I don't know about this picture, me and you in the end here. I would have left that out, but I appreciate you including this. Here's how you contact him, guys, if you want to. His phone number, his email address. What are you going to say, Sam, real quick?
So it's funny because there's absolutely no pictures of you on the internet. I'm just saying.
Well, I try not to, my friend.
Exactly.
This is on our website, guys. We hope you got something out of this truck stop. We have one each month. I think the one that Beth has planned next month has to do with pollution coverage, and I'm sure, Sam, you can talk about that, both transportation pollution, if your policy does not buy the buyback, and or on-site pollution, if insurers have garages and other things. So next one, we're going to talk about your motor carriers and their pollution, not hazmat necessarily, but their exposures to losses and that have an element of pollution in it, and what kind of coverages that can be provided for them and needed for them. With that said, Sam, you know, my friend, I really appreciate your time and effort. Thank you a lot for this.
Thank you.
And we're done.